the session has already been instituted. It's about talking about the ushering of the green wave and what the role of regulators and regulation can facilitate that. As you can all see, the energy landscape is changing at a very rapid pace, and a very critical role has to be played by the regulator to enable that transition so that we minimize the risk and also ensure that the decarbonization goals are met in a timely manner. So this also means that there needs to be, on a evolving basis or at a constant level, we need to introduce with new market reforms principles or new instruments that can really bring in the much needed capital. As we have been hearing from our earlier discussion, while there is no dearth of capital available, but how do we ensure that capital is given to the right set of technologies which can really help in minimizing the impact of greenhouse emissions on the planet? So I think with that context, we do have a line of panelists who bring in lot of knowledge and wealth. And without further ado, I'm going to start with you, Mr. Bridge. You have been with RBI, and what, according to you, is the role of regulator in facilitating the green transition? And what are the key initiatives that have been taken from the RBI in this regard?
Very good afternoon to all of you, and I'd like to first compliment ORF and GAP for coming together, organizing this prestigious event, and thank you for the kind invitation to be a part of this event. So, as regards the role of regulation, we are all aware that regulation can play a very, very important role, primarily in the uptake of green credit in India. And as regulators, we have the mandate of regulating and supervising our financial sector, and therefore, as a central bank, we are very, very uniquely placed to ensure that financial institutions start looking at this sector more closely, start lending more money in this area. We can, through our policies, incentivize climate-friendly incentives, investments. We can support the mobilization of the financing that is required for facilitating the green transition, and so on. And globally, if you look at most central banks, they are using what is called as positive reinforcement, and they're using a policy of giving incentives and so on for supporting the green transition and encouraging green finance. The Reserve Bank of India has been doing a lot of work in this regard, and in April 2021, we joined what is called as the Network for Greening the Financial System, the NGFS. It was launched in 2017, December. Today, its membership has increased significantly. More than 127 central banks and 20 other leading entities are members as supervisors. So this shows how much interest green finance and climate risk management is on the agenda for central banks and supervisors globally. On the occasion of the COP26 summit in Glasgow, the Reserve Bank of India came out with a public statement showcasing our commitment to scaling up green finance. And we've also, in recent years, tweaked our policy measures. For example, renewable energy has now been made part of the lending for renewable energy has been made part of the priority sector lending. And earlier this year, the Government of India, we supported the Government of India in its maiden sovereign green bond issuance, which we know was successful. In the second half of this financial year, another 20,000 crore sovereign green bond issuance is being lined up. We are aware that with all this, it helps in price discovery. It also helps in creating an ecosystem for green financing in the country. We are all aware of the net zero targets and the nationally determined contributions, and therefore, we are aware that financing of a very, very large scale is now required. And realizing all this, the Reserve Bank of India has come out last year with a discussion paper on climate risk and sustainable finance. It was very well received, and we've got very good feedback. And assessing the feedback, we have in February this year, our governor has announced three regulatory initiatives. One, we've come out with a framework for acceptance of green deposits. Two, we're going to come out with a guidance note on climate scenario analysis and stress testing. And we're going to come out with a framework for disclosure of climate-related financial risks for our regulated entities. The Reserve Bank has also been doing quite a lot on spreading awareness in the area of green finance. In May this year, we came out with our report on currency and finance, which has a theme towards a greener, cleaner India. And there's a very important data point in this report, which suggests that the green financing requirement annually in India could be to the tune of 2.5% of its GDP, which is very, very important. And it gives the breakup in terms of numbers and so on. So I'll conclude here by reiterating that in the context of green credit, regulation is, and particularly in the context of India, regulation is going to play a very, very key role, a very supporting role, a very, very facilitating role. This is very important. And with this, we will be helping incentivize climate-friendly investments, and it will also help support the mobilization of capital for the energy transition and also for sustainable development in the years to come. Thank you.
Mr. Bridge, you very rightly pointed out some of the initiatives which can facilitate, whether it's the priority sector lending or looking at other frameworks that you discussed. But it's been in the pipeline for some time. While if you see the progress that has been made globally, whether it's the US Federal Reserve or the Bank of England, they've already undertaken or are undertaking a lot of stress tests in for climate risk. While we have been discussing about it and maybe some pilots being done, so what is the status? I know in 2023 February, you did announce that all these guidelines are going to come up, but what are the real timelines we are looking at, and how soon do you think the public and the private sector banks will start incorporating and building? Because these are very forward-looking risks, and there's always this lack of understanding when it comes to, a physical risk is still understandable, but a forward-looking risk like a climate risk, it's very difficult to understand. And is there a preparedness at various stakeholders level? Sorry, too many questions, but yeah, would love to hear from you.
So that's a very important and a very useful question. So when our governor announced on February 8th, it was also very clearly mentioned in the guideline, in the announcement, that these guidelines would be announced in a phased manner. And as you're aware, the guidance note on climate risk and sustainable finance, which we are going to come out with, that is, as we speak, it is in the internal consultation process, the internal approval process for this. And you'll also be happy to know that Reserve Bank of India, as the regulator of the banking system, we very closely, converse, talk, have dialogue with all the leading financial institutions, banks, to find out their preparedness, to find out their readiness, to find out their capacity building, where they stand in this area. And the messaging has gone very, very clearly to all these institutions that they must take physical and climate risk and the transition risk, a part of this climate-related financial risk, very, very seriously. They must give a lot of attention to this. And in addition to these guidance note, which we're going to come out with, if you look at the speeches and the communication by our top management, a number of speeches and a number of public fora, our top management has also spoken about the importance of banks and financial institutions giving greater attention to climate-related financial risk. So a lot of work is happening in this area, and I'd like to assure the House here that our banks and financial institutions, particularly the leading ones, are putting in more and more internal efforts and building internal capacity to start mitigating this risk in the years to come.
Yes, I would like to compliment RBI has been very, very forthcoming in kind of including these risks and coming up with the policy framework. So great work, and look forward to the final regulations coming soon. Mr. Tyagi, I'll come to you now. We have heard from the central bank, and you have been associated with SEBI for a long period of time, and you have seen the kind of developments that have been happening. So according to you, what are the key non-disruptive, factors that can really help in accelerating green transition? And what are some of the key ingredients that can help in minimizing the financial risk that we have been hearing quite a lot?
Thank you, Vibhuti. Various numbers are being talked of as to what is the requirement in terms of $1 trillion for this energy transition. The numbers which came out in G20 meeting recently. What is more important is the World Stability Report, Financial Stability Report taken out by IMF in October. last month, where it said that almost 90% of this requirement will have to come from the private sector, which as of now, ex-China is only around 40%. And to reach it to 90% by 2030 is a very big challenge. One is the number and the requirement of funds. Second, more importantly, whether the economy will be able to absorb it without raising financial stability risk. That is very important. If it is unplanned, all the assets which are held by financial sector, whether it be banks or insurance companies or asset management companies, if those assets have a steep decrease in valuation because of unplanned transition, so what happens to the asset side of those financial sector intermediaries? So this is very, very essential. This, I think, has not, Indian intermediaries have not really realized it, if I may say. And FSB, of course, brought out a paper on this in 2021, and with a broad framework, and they've been reporting to G20 as to what are the developments worldwide. But in the Indian space, of course, RBI took out that paper in July 22, and they made a statement in February 23, as you said. But they've yet to issue the guidelines as to how will they regulate their regulated entities. And similar things should be done by the insurance sector and by SEBI, by IRDAI and SEBI, because they also hold assets. So it's a big risk, which, so one is to get those funds, other is to see that they are absorbed in a manner which is systematic manner. For instance, for banks for capital adequacy requirements, they have to mainstream this in the capital adequacy requirement as to provide for, when they invest in assets, what should be the risk weightage given to the risky assets, risky from the climate finance point of view. Similarly, for the insurance companies, what should be the modification, the premium amount on account of this? If their clients or their clients' assets get affected by climate change. And asset pricing also, what are the assumptions? So this requires massive scale intervention by all three regulators, the training, capacity building, learn from that FSB global report. So this is something I think we have a lot of catching up to do. This is what I think.
Right. I think definitely there is a gap there and there's a lot of catching up required. On the other hand, while we discuss, there are many actors that can bring in that capital. So I think given the huge need of energy transition requirement, the long-term patient capital, which is in the form of pension funds, insurance companies as well, how do we ensure some of those capital reforms that should be undertaken that can really help in particularly minimizing the credit off-taker risk as well as the currency risk? Because this is one of the big issues that we are seeing. If we really specifically are looking at international investors, how do we kind of hedge or come up with some of those instruments for addressing the currency risk as well as the credit off-taker risk?
I think the main thing which needs to be done is to define taxonomy. That is done by the regulators, RBI, or by all regulators combined, or by the government. SEBI's regulations of 2023, they define what are the green securities, but they have limited use. If you see on the green bonds, the amounts which have been raised, if I am right, I may be outdated, hardly 4,000 crore in rupee terms. So taxonomy, unless you define that, the investors are not sure the investments are going where. Apart from greenwashing concerns, for institutional investors, it is very important to know that they're investing it because they have fiduciary responsibility for their investors to show where they're investing. And in the previous session, like the projection was being made that first 90% to come from the private sector, for emerging market, maybe 1/3 was one projection. I don't know whether that projection is right, but a significant portion to come from foreign investor. Now, naturally, a foreign institutional investor who wishes to invest in India would see that how is the taxonomy compared with, say, like recently EU has come out with a taxonomy. How does it compare with that? So unless they're satisfied with that, to say that that funding will come, is something which is more in the air. And other than taxonomy, you rightly said there are two other things. One is the bond market development. Bond market development, unlike equity market development in India, bond market is pretty underdeveloped. And one of them, there are many, in fact, 97% of the bonds are raised in AAA, AA plus and AA category. Now, many of these clean energy projects will not match that. So you have to have a credit enhancement mechanism, which government has been talking for the last many years. Government has been talking in the context of infrastructure development projects, not for this green thing that has come recently. But that mechanism, nevertheless, if it comes for infrastructure projects, will be useful here also. That is something which is required. Then, as you rightly said, currency risk. If the foreign investor is coming, so currency derivatives market needs to be deepened. Of course, there on account of capital account convertibility, there is a conservative approach which is being followed by the central bank. But at least for the proponents of green projects, to begin with, I think the position limits should be relaxed, because without that, without taxonomy, foreign investors will find it very difficult. Without bond market, especially credit enhancement, domestic investors and domestic projects will find it very difficult. So these are some of the things I think we should give importance to.
So just picking up from the last point made by Mr. Ajit Tyagi on the taxonomy. Now you are part of SEBI. We did have some clarity, I mean, in terms of green debt securities program, which was launched. Then RBI had its own green deposit framework. So while the two entities have come up to some extent, some kind of definition, but it's more at an entity level, not at like a macro level, and for everybody to adopt and minimize this risk of greenwashing by having a clarity what constitutes green as far as India is concerned. So where are we on this? Is the current regulator looking at coming up with this kind of a taxonomy?
Actually, it has to be more on a national level, I would say. So we have a bit of green taxonomy built in around our green bond framework, wherein we have given few activities which would qualify to be covered under green bonds, and we have recently reviewed it to increase further activities. So answer, your numbers are right. We have not increased, it's 4,500. So unfortunately, sir, the numbers on green bond, it's still the same. So unfortunately, we have not seen much of a traction on bond side while we have reviewed it, and we have also increased the number of instruments. We have now come out with transition bonds, yellow bonds, blue bonds, and we believe that the corporate sector would use these bonds to for fundraising for their to meet their targets and to reorient their business. So again, the other thing which is not exactly a taxonomy is disclosure part, the corporate disclosure part that we have come out with, which is called the BRSR. And actually, Tyagi sir has been very instrumental and guiding force in coming out with that disclosure report, which again can be used by corporates for showcasing their green side. So it is much different from our global counterparts. It has reporting on E side, the energy, the GHG, the water, the waste, and on social side on the community, the diversity, inclusivity, and the well-being of the employees. On G side, we have targets, goals, objectives, opportunities on ESG side. So while overall, I would not say we have a taxonomy, but yes, we need a taxonomy on national level so that we can use it. But these are the small tidbits that we have used to make disclosures, or you could say it's a kind of taxonomy towards this side.
Well, you did bring this thing of disclosure. So while India has its own BRSR's disclosure regime, which is the business responsibility and social responsibility regime, but we do also have IISB S1 and S2 standards, which is your International Sustainable Standard Board, which has come up with a standard which is, at a lot of countries are aligning with those standards. So how do you think are BRSR standards interoperable and kind of align, or do you even think that, the domestic standards should align with international standards so that there is more clarity in terms of, again, our energy transition goals cannot be met entirely from domestic sources. So we will need a lot of international capital as well. So are we ready for that?
So we agree that we need comparable and consistent set of disclosures. But basically, we intend taking a twin track approach here, I would say. Yes, after publishing of ISSB, there would be push from investors for the corporates to adopt it and make disclosures likewise. And the corporates who intend attracting foreign capital basically would have to adopt it and disclose it, the ISSB standard in that format. But at the same time, we are aware of our ground realities. We know that emerging markets face different set of environment and social challenges, and we are not at that stage. So, which is why our corporate reporting, the BRSR, has that India-specific or emerging market-specific KPIs built in. It has to have that nuance because emerging market is separate from foreign market. And so I would say, in fact, we took the same approach in ESG rating side also, where we have said that you have to have a product which will have focus on India-specific factors while coming out with ratings, which probably will be used by local investors, and also a global product which will be seen by the global counterparts. So companies, listed entities in India will have to make disclosures as per BRSR, but companies who want foreign capital will obviously make disclosures parallelly in ISSB format.
But that increases a lot of work for the companies.
So we have
to-
interoperability built in. We have.
Sure, please.
Yes,
go
sir.
ahead.
Actually, on IFRS S1 and S2, they have come only in June 2023, and they're yet to be discussed in ISCO as to what extent there could be jurisdictional nuances, because even they state so. So as Surbhi is saying, that will take some time, but as of now, BRSR provide for interoperability with the existing ones, TCFD, SASB, and GRI.
And even ISSB is coming out, it has already come out with proportionality and some kind of scaling. And the adoption guidelines are also supposed to come by the end of November, wherein they will further scale it down and give that jurisdictional level flexibilities further. We are yet to see that.
I think, yeah, that distinction needs to come in from emerging economies versus the developed economies perspective, definitely. Coming to you, Mr. Goel, we have been hearing a lot by the financial regulators and the central bank on the financial sector reform. But on the electricity side of reforms, what role can CERC play in accelerating the green transition in the country?
You see, as far as the RE capacity is concerned, we have done very well, say, in the last 6-7 years, almost tripled the RE capacity in India. But the kind of targets that we have set for ourselves are very, very ambitious. Like we are planning to have 500 gigawatt of non-fossil fuel capacity by 2030. And we also want that 50% of our energy is through the renewable. With these kind of, targets that we have, and especially considering in the perspective that at present our non-fossil fuel capacity is 186 gigawatt, which we want to take to 500 gigawatt in next 6-7 years. And then again, at present, if you really see in generation terms, it's only around 20% of the energy that is coming from the renewable. So that we want to take to 50%. So they're very, very ambitious targets. If we have to achieve them, we really need to have a policy framework and the regulations or the regulatory framework which really encourages investment, because the resources with the government are limited. And even whatever capacity addition that we have had in the past, it has mainly been because of the private sector. Now, as far as policy framework is concerned, I think the bidding guidelines that have been improving over a period of time, I think they've been very, very effective. And that is how we have seen that the capacity additions have taken place. And also we have seen that the prices have fallen down considerably. Now, I mean, as a regulator, we find that, I mean, there are issues because when the private player is, I mean, putting his money, he also wants that he gets an adequate return. And that is why it's very important that the contracts are honored. And in every contract, I mean, we have two clauses, one is regarding change in law and another is force majeure. And we find that most of the disputes that are coming to the regulators, particularly CRC, are with regard to these. So I think these need to be addressed, and the effort on the part of the regulators is that these are, I mean, decided as early as possible, and so that they are able to raise finances and there is a regulatory certainty. Another issue related to that is that normally when the projects are being awarded, the solar projects are coming up, say, within a short span of, say, 18 months or 20 months. On the other hand, these all locations are very, very far away, say in Rajasthan or in the remote areas. And in case the power has to be brought to the load centers, then we require to build huge transmission. Again, these transmission lines are to be built by the private sector. And again, there are major issues of the mismatch between the generation has come, the transmission lines have not come. On the other hand, there could be issues that the transmission lines have come and the generation not come. So these have to be addressed, that who has to bear the cost. So these are the issues and the challenges for the regulators. And it's also on the other side that whenever the petitions, they come to the regulators, I mean, they're really exaggerated. So it's not that whatever is coming to us, we can immediately allow it. So, I mean, that is the challenges that we have, that how do we really address the concerns of the private sector, particularly with regard to change in law and the force majeure. And then other than that, as the regulatory framework is concerned, I mean, a lot of efforts have been made. We have this renewable purchase obligation, which casts an obligation on the distribution company that certain percentage has to be fulfilled through renewable energy. And this is a increased trajectory which has been provided till the 2030. Again, I mean, we have also come up with a framework of renewable energy certificates, where we have introduced a new concept of multiplier. So as the technologies which are already established, there the multiplier is only 1. Whereas we want to encourage the hydro, for that the multiplier is 1.5. And as regards the energy generation from biomass and other areas is concerned, the multiplier is 2.5. So this is again to promote the new technologies in the renewable sector, and which is being done through the multiplier. I think the time is running, so I'll stop over here. Yeah.
Great. Just tying up with, again, the financing kind of a needs, how do you think the power market regulation in particular can carve out a space for investments in green energy transition? We've been discussing about future forward market from so long, but that market still hasn't seen the light of day, which can really help in facilitating, bring in more investment specifically for RE. So what are the challenges over there?
Yeah. Again, in the power market, so in the 2020, CRC came out with the new power market regulations. I mean, they've been very, very progressive. And after coming of those regulations, so we have introduced a lot of new products. They are particularly specific to the green energy. Particularly like now we have particular contracts which are, I mean, term ahead, green day ahead market and green I mean, number of these green contracts have been introduced. But unfortunately, even in the present juncture, whereas the transactions through the power markets have grown at a CAGR of around 7% in the last 10 years, but still we find that they are only constituting around 7% of the total energy that is being consumed in the country. So we need to encourage that, and we now have 3 power exchanges, but again, you find that only one of the exchanges have the majority share that is taking place. So other than that, I think as the time goes and with the introduction of the green products, I think that more and more transactions will take place through the power market. And we also have other regulations, particularly deviation settlement mechanism regulation, where we have given special dispensation for the renewable energy. Because in the, say, normal thermal or the hydro, the deviation that is allowed is much less. But whereas for the renewable, the deviation allowed are much more. So I think we are seeing the growth, and I think in the years to come, with the more and more renewable coming, the people will be getting into. Just wanted to mention one more thing is the introduction of the real-time market, where the power, I mean, the transactions can take place 1 hour just before the actual delivery. So that has taken place and taken, I mean, in a very big way, and the growth has been very, very phenomenal because of the intermittent nature of the renewable energy. So people want to transact their things, very, very close to the actual delivery. And I think the RTM is also going to play a big role in the years.
Thank you. I think, yes, there's been a lot of progressive regulations that have really led to development of, especially for the RE sector. Coming to you, Ulka, we have heard in the previous section Mr. Singh talking a lot about the MDB reform. So there's a lot of discussion happening on the way the MDB needs to start taking more and more, risk, whether or expand their capital intake to a lot many other, I would say, players as well as technologies, which are much more riskier. So a lot has already been discussed, but if you really want to add something on the way MDBs can facilitate the green transition, especially keeping in mind the Indian context, would love to hear from you. Yeah.
Sure, thank you. There's a big clock counting down over here, and I feel like I'm an Oscar Award winner. When they're giving their speeches and they're being told to wrap up, I'm feeling like that. But anyway, with the countdown going on, I just want to say I'm so happy to be in a panel of regulators. I'm not a regulator. I belong to a think tank, World Resources Institute India. But the role of regulators is so important because they are the ones who tame the animal spirits of the market and who actually protect the small players. So by ensuring fair rules, ensuring known standards and metrics, ensuring integrity of markets, this is really the difference between cynicism of the public, people will just dismiss, oh, ye to sab greenwashing hai, and hope. The previous panel spoke about hope, and this, having fair rules, having known rules, will actually make sure that the public are active participants in this journey towards energy transition and green transition. So I really wanted to, but specifically the kinds of points that you've all raised, again, there's a very important role, like for example, if you have a power purchase agreement, a long-term power purchase agreement, and it gets rolled back and all that risk is there, this affects the cost of capital. And this affects, in fact, MDB perception about lending. So that's really the link between the kinds of things that the regulators have been talking about and the willingness of MDBs to provide targeted investment for the small, distributed, long-term types of projects, investments, which are needed the most in this energy transition. So I'll speak about 3 things very briefly. The first is that MDB should coordinate. Each of them have their own conditionalities, their own metrics, their own reporting frameworks, but there is no reason why there cannot be more coordination in a given region. Second, I think and this is what Mr. N.K. Singh also spoke about, that the way they have their criteria for lending, that can be revised. For example, the World Bank has the single borrower kind of limit, which limits the ability of countries to apply for more funding, and that can be relaxed for climate action. ADB, Asian Development Bank, for example, has now announced that 3/4 of its portfolio will be for climate mitigation or adaptation. Other MDBs can also do that. So there can be a coordinated approach where they take into account climate risks into their, and balance their sustainability goals with the macroeconomic goals. Secondly, there's a lot of experience from natural resources management sector in adaptation projects and how to deal with projects which are distributed, rural, low cost, and the same can be applied for decentralized renewable energy as well. And here, MDBs can take a programmatic approach, a portfolio of projects with different levels of risk, pool that risk, rather than taking a project-by-project approach. And they can even take transboundary kinds of actions. The third is, and I think this was mentioned briefly, but needs to be stated more explicitly, more emphatically, that all the MDBs do have, they have their private focus as well. They have their private arms. I think those can take more risk. For example, as Mr. N.K. Singh said earlier, there's no reason why these private-focused MDBs should have such a lengthy project preparation and deployment phase. That can be cut down. And last, I think I'll just mention link between bigger MDB type of funding and more, the leveraging, the blended finance, which is in India, for example, if you look at the small projects, small borrowers like MSMEs, one of the limiting factors is the lack of collateral. And here, DPI, Digital Public Infrastructure, that India's G20 presidency has actually been highlighting, the use of account aggregators can help these small businesses provide the kind of collateral history that can help to raise more private finance. Let me just leave it at that. Thanks.
I know our audience has been listening very, very patiently. So if we can take one or two questions and maybe okay, can you send the mic there? And just make your question very, very brief. If you have any perspective to share, you can speak with the panelists later, but and to whom it's being addressed to, please identify that as well.
Yeah, thank you for recognizing the question. My question is about climate reparations in particular. As we know, historically, a set of 20 Western developed countries have been responsible for historically most of the emissions. And as it stands, climate reparations haven't worked yet, instead of finances being available. So according to you, does such policies work? And if so, how can we make them more accountable? And if not, what are the kind of other things that we can do instead of those kind of policies? Thank you.
Okay, let's take one or two more questions and then maybe the gentleman over there.
Yeah, good afternoon. My question is related to the Central Electricity Regulatory Commission. So, yes, there is phenomenal progress from the CERC side, but there is very limited progress from the SERCs because they are the similar stakeholders as compared to the CERCs, and DISCOMs comes under the SERC's structure. So what is the roadmap for that? Thank you.
One last question and then.
Hello. Thank you for this opportunity. My question is from Goel sir. Sir, as you have given highlighted about the this ambitious target of increasing the capacity of RE of almost 50%. So simultaneously, with respect to the Indian DISCOMs, we have the challenge of peak power management and the surplus power during the daytime. So is there any measure taken by CERC or regulatory point of view that we can maximize the utilization and we can just minimize this peak power management through this RE, integration of RE?
Mr. Goel, you want to respond first and then Mr. Bridge.
And sir, DISCOMs have the banking criteria for only 25%, some DISCOMs, bigger DISCOMs like UP and all.
You see, I can only respond in this way that our regulatory process is very, very transparent, and based on the concerns that we receive from the various stakeholders, particularly the distribution companies, we've been regularly updating or revising our regulations. I know that the kind of obligations that are being cast on the distribution companies, particularly with regard to renewable energy, are, quite onerous, and the targets are also very, very onerous. But I think the kind of regulatory framework and the policy support that is being provided by the government, I think we will be able to address the issues of the distribution companies with regard to the renewable energy.
Mr. Bridge, you want to respond to the other?
Yeah, I'd like to respond to a colleague who has asked this question on policies and frameworks. So, as you're aware, policies, frameworks are very, very important, very essential because they bring more certainty. They give the regulated entities, at least in the case of the Reserve Bank of India, for example, when we talk to our banks and financial institutions, they are very keen to see what guidelines we are bringing out in the area of climate risk, sustainable finance, and so on. So they get more comfort. And two, we've seen that once we come out with the guidelines, policies, frameworks, etc., it incentivizes these regulated entities to take more concrete action. From an overseas investor point of view also, when they are looking at putting more money in countries like India, they will look at what are the frameworks in place what are the disclosure frameworks in place, what are the accounting frameworks in place, what are the guidelines in place, and so on. So these give a lot of comfort. And just to draw a parallel to the priority sector lending guidelines, for example, once renewable energy was introduced as brought in as part of this, we could clearly see a significant increase. If you look at the numbers, today renewable energy has been financing has increased quite significantly. If you look at State Bank of India, for example, India's largest bank, its renewable energy portfolio as of 31st March has stood at 36,423. And if you look at just this figure, 4-5 years back, prior to introduction of renewable energy into this, into the renewable energy, into the priority sector lending portfolio, you will see that the figure was much less. Then, even for raising finances, particularly by large institutions, we see that you require what is called as a financing framework. For example, you require an ESG financing framework, you require a green bond framework, and so on. So these type of frameworks, these type of guidelines, these type of policies are very, very important, and they bring in a lot of certainty to the market, bring in a lot of certainty, a lot of comfort to all the entities who are part of this ecosystem. Thank you.
Great. With this, I'll bring this session to a close. So thank you, everyone, and a special thanks to all the panelists for a very enriching discussion. Thank you.